I think things are going to get real interesting over the next few months as all the commercial banks scramble to get long, to mitigate and minimize their short positions in an unallocated manner that, according to Basel III, they're out of bounds and they need to get this fixed quickly.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us kaiser@milesfranklin.com. Welcome back to Liberty and Finance. We have a returning guest here. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, May 11th, 2021 for a weekly market update. Andy, thanks for coming back on Liberty and Finance.
Good to be here, Dunnigan. Thanks for having me, as always.
Our guests were clamoring for you to come back. We missed 1 week with you while you were moving. You certainly deserved that. I can't imagine. We've been through that before. It's quite disruptive to anyone's life. And glad that you're back here. Nice to see your lovely new home. And a lot of people, you're not alone, are thinking about moving to Florida or other states that are liberty-loving. And we keep cheering on whenever we hear Governor DeSantis saying something about not rolling over to government overreach, but standing up for the rights of the people. And we always, of course, have heard about no state income tax there in Florida, so that's another draw. But anyway, we wanted to quick get a market update from you on what major dynamics you're seeing in the gold and silver markets, the broader economic debt, supply, demand picture that you can bring us up to date.
Yeah, we're seeing a lot of things. Within a month or two, the Basel III reserve requirements come into play, and the 85% equity to position limits are coming into play. And you got the World Gold Council coming out publicly saying that this can actually blow up the entire settlement clearing system on the LBME. And you have commercial banks that are scrambling, I believe, to get out of these unallocated large short positions. I think that's going to have a lot to do with volatility. You're going to see a lot of volatility over the next few months as they use any opportunity, whether it be in rhetoric or in timing, a la dumping 35,000 contracts right after London closed before New York opened the other day. You're going to see volatility to the downside, but these downside volatile moments, I believe, will be bought very quickly. Just don't get knocked off the tree would be my advice right now over the next few months, as these big banks are really trying quickly, I think, to get out of these unallocated positions, whereby they will be in big trouble if they don't get to a 85% equity to position limit. And the London Metals Exchange is a unallocated 100-to-1 leveraged program, and that's not going to work under the new Basel III conditions. So they have just a very few couple of months, a very short period of time, rather, to get in line. And with that, you're going to see, I think, some downside pressure. They need to sell to get out and to cash settle. But ultimately, this will be very bullish for the price of gold and silver. Ultimately, what it means is that the banks are not going to be able to push the price around the way that they used to, is the way that I take it. So I think that to me is first and foremost. I would use these corrections, these beatdowns will be short and they'll be violent, perhaps, but I would use them as an opportunity to increase your position, because by fall, it's a whole different ballgame. If the banks do not have the ability to be massively leveraged in these short positions, the whole game is rewritten. So that to me is point number one for sure.
Is it oversimplifying it to make the metaphor of a game of musical chairs where now there's actually this rule change is forcing people to have a physical chair? So this idea that I have a virtual chair that I could get if I really wanted to, now all of a sudden the big boys are having a scramble for chairs, so don't be the last one?
Absolutely, 100%. There's no question about it. And I think that it's now becoming a reality. And when you see the World Gold Council, who's supposed to be a gold advocate, come out and say that this is going to blow up the whole system, I say good riddance to the system. The system is the problem. When you see inflation in commodities the way that we are seeing right now across the board in just about every commodity, from canola oil to lumber and everything in between, there is absolutely zero reason that gold and silver should not be much, much, much higher basis the inflation that we see in the system right now in commodities. In fact, gold and silver are the barometer for the inflation, and you wonder why they've been holding it back. For a very long time, the big money has been holding back the price in gold and silver for a reason. And in my mind, the reason is twofold. One, it's to accumulate it, and two, it's to keep people from really seeing the reality of what's happening. Yes, they see that the prices are up in lumber and in beef and in oil and all these other things. And there's always a reason behind it. It was the COVID. It was the ship in the Suez Canal, blah, blah, blah. The truth of it is that the dollar is being eviscerated right out from underneath us. They are printing it away to worthlessness. And gold and silver are the barometers by which we would normally measure that. They're holding it back, and they're using these held back prices to eradicate themselves really from these unallocated levered positions, which now have to change, where you have to be 85% collateral to position. And that's a far reach from where they are right now. And they have a very short amount of time to get there. And in order to do it, they're going to have to knock the price down to cover. Well, they'll do that in thinly traded sessions, like as New York is opening right after London is closing in the access market, or in the middle of the night, 2:30 in the morning at the AM fix. It's the same playbook that they've used for a very, very long time, only the playbook is ending. The game is ending. It's the fourth quarter with the 2-minute warning, and they have to do all that they can, really, I think, to get to this point. If I had to guess, I would say, by the end of this year, things are vastly different in the precious metals market, simply because the banks won't be able to use the leverage that they do to create a perception of reality. It will have to be more of a cash and carry type of an environment, not one where it's levered at 100 to 1. And that's very, very, very bullish, ultimately, for the price of metal. And when you throw in massive inflation, and when you throw in the Belt, Road, and Rail Initiative, where 70% of the world's population is being indoctrinated into the new Chinese digital yuan, put all of these things together, I don't think you could ask for a more bullish atmosphere than what we see right now. And one of the things that you have to do, as we talked about earlier, you have to have strong fingertips. You've got to hang on. You have to trust your gut. It's been a very long road. And you hear people saying this over and over and over again, myself included. I've often felt like the little boy who cries wolf, but I always say, remember, at the end of the story, the wolf comes. When you base your conclusions upon logic, economics, mathematics, it comes true. And now, for the very first time ever, the Basel III agreement is going to make the wolf come. Has to. They cannot hold back the price when they're doing it without massive leverage. This new ratio of equity to debt will change that dramatically. And then we look at the environment with getting physical supply. We've talked about how the U.S. Mint, I said, would close for several weeks and got a lot of heat about that online. Well, maybe they didn't publicly admit to closing, but I can tell you they haven't made a thing. Allocations are next to nothing, and it's been that way for several weeks. I don't know if they're going to make any more of the 2021 Silver Eagles. Sure feels like they're not. It will go to the Type 2 2021 Silver Eagle. A lot of people are wondering about that, too. Are they putting a microchip in it? They've been very tight-lipped about it. The Royal Canadian Mint uses micro engraving, which is a little tiny maple leaf about the size of the tip of a pencil that it costs millions and millions of dollars to buy a machine like that. They use that for their anti-counterfeiting feature. I'll tell you this, if they really do put a chip in the new gold and silver Eagles, I don't think anyone will buy it. But they've been very tight-lipped about what that security feature is. So as far as I know, they come out in July. And if you told me that we're not going to see anything out of the U.S. Mint until July, I'd believe it. That's how slow it's been coming out of there. And what does that portray for premiums? Probably much higher in the near future. So here again, the mints are the model of inefficiency, and it's not getting any better. In fact, most of our allocations for the mints are not until mid-June right now on the UK Mint and on the Royal Canadian Mint when we sell out of what we have. Ironically, through all of the craziness surrounding the Perth Mint, here again this year, 2 years in a row, they've been the savior to us with product. They've been the best performing mint of the 6 major mints of the world, as we've been able to accumulate north of 150,000, maybe even closer to 200,000 silver kangaroos, most of which we've received and the rest of which, half of them anyway, are due in over the next 10 days. So, but here again, when we look at what is available and how long it takes to get it, like in the case of Maple Leafs or in the case of the Britannias, when we sold out of them recently, it's mid-June before we get anything else. And we had to pay up front. So you're paying, 5, 6, 7, 8 weeks in advance, high premiums, and crossing your fingers that you get it. I had a client who just placed a very large order for 100 Royal Canadian Mint 100-ounce bars, and we will not have those until the second week of July. Now, this is for our Brinks program in Montreal, meaning it's coming directly from the Royal Canadian Mint. They're telling us they'll have those to us by the second week of July. This is what we are facing. And when we talk in the past, Dunnigan, about, I always use the quote and the statistics that Rick Rule talks about of the 40-year mean, 22.5% allocation over the last 40 years in terms of allocation to United States portfolios, was 0.5% in right before COVID in 2020. If we are indeed regressing to this 2.5%, which represents a 5-fold increase, and maybe it even becomes more than that, approaching the 8% allocation we saw in 1980, here again, getting product is going to be ridiculously difficult. Premiums are going to be higher and higher and higher. Because look, and I've said this before too, a lot of this bears repeating over and over and over again, because really to me, these are the only things that matter right now. There is no bull market like a gold bull market. No one sells us anything, because the crazier the world gets, people's grip strengthens on what they've accumulated. So in all the business we're doing, and I know you can attest to this, so very, very, very little is in the way of secondary market. Nobody's selling into this market. No secondary market supply. This would be the death knell for local coin shops. No one sells them anything. And if they didn't limit how much people could buy, they'd be sold out of product over the weekend. And so with nothing coming in, low on the food chain in the respect that they're not large companies who have relationships with big distributors and are able to buy 100,000 ounces at a time, then the distributors look at those types of dealers as an afterthought. And so this is, again, making supply really very difficult to come by if you can't go to your local coin shop, and the big dealers out there are looking at long delivery delays. This is what we have to look forward to. This is what I think is coming if things continue the way they are, or even get more intense in terms of expansion into the mainstream. So I guess bottom line to me is I see volatility that ultimately leads to rising prices. Volatility that should be looked at as a subsidy and a gift, because I don't think you'll see this kind of volatility once the leverage is pulled out of the system. And we're seeing difficulty getting product. And the more it becomes recognized that inflation is coming, the more that people pull out of equities and cryptocurrencies with profits, knowing that President Biden wants to raise the capital gains rate north of 40%, then you're going to see some real inflation. Then you're going to see real difficulty getting product. I think we're on the cusp of it. And, I normally don't like to go out on a limb and say these kinds of things, but it's something that I've been believing for a very long time. And I think it's going to come closer or sooner than people think. And quite frankly, it's got me a little bit concerned at this point.
with that as the backdrop, for people who are just trying to acquire their first precious metals and want something that's extremely versatile and a good first step, or for people who already have some and want to add more because of all those factors that we've been talking about, what can you offer in terms of a weekly market special?
Yeah, we have the pre-1965 90% silver, often referred to as junk silver. Bad name for it. Shouldn't be called junk silver. It's anything but junk silver. We'll call it pre-65 constitutional silver. Right now, we're selling that at $5.90 over the price of silver. And this, if nothing else, encapsulates what I am talking about rising premiums continuing to go. This is something that can't be reproduced. And as you and I were talking about off air, the last time we did this special, it was priced at, I think, $1.49 over the price of silver. That was earlier last year. But here again, you're looking at a situation where at $5.90 over, we will be less than everyone in the United States. It's a situation where you can't find it, and it's the most utilitarian, versatile form of silver you can own. If things really ever got dicey, having dimes and quarters minted prior to 1965 will give you the greatest utility in terms of being able to trade, to buy something, or just to sell it. Who knows how high silver goes? And when you realize that in a dollar's face value, there is 0.715 ounces of pure silver. If it was uncirculated, it'd be 0.723. But the industry uses 0.715 with the thought being that over the last 50, 60 years, all these coins being run through coin counters, that a little bit gets worn off. So if you take 0.715 of an ounce per dollar, divide it by 4, that's what you have in quarters, divide it by 10, that's what you have in dimes. 14 dimes is almost exactly an ounce of silver. 4 quarters and 4 dimes, there's your ounce of silver. But it's, I think everybody should own a bag of junk silver. And we have a real nice supply we bought from a very large estate sale, and going to offer those until they're sold out at $5.90 over any quantity over the price of silver. And I think everyone should own some.
We'll get a picture of that on the screen so everybody can see that. It'll also be in the description of this video, and it'll be in our newsletter. So people, if you have not yet subscribed for our newsletter, go to libertyandfinance.com, our homepage, libertyandfinance.com. Put your name and email address on the left-hand side. Make sure you get in for our free newsletter that goes out at least 3 times a week with all of our interviews with Andy, all the Miles Franklin weekly specials, all the interviews with all of our guests, their links, their resources, articles, that sort of thing. So don't want to miss out on that. Andy, if people want to stay connected with Miles Franklin, because you also produce some videos, where should they go?
That would be info@milesfranklin or milesfranklin.com. We are building a new website. We hope to have it done within the next 90 days or less, which will be much fancier than the one we have right now. But in the meantime, milesfranklin.com or info@milesfranklin.com. And I can always be reached directly at Andy@milesfranklin.com. So, look, Dunnigan, I really appreciate being here with you and getting the word out. And these are crazy, interesting times. And, I think it's important that we share the information that we get in a timely fashion. And I think things are going to get real interesting over the next few months as all the commercial banks scramble to get long, to mitigate and minimize their short positions in an unallocated manner that, according to Basel III, they're out of bounds and they need to get this fixed quickly. So it's going to be bumpy. It's going to be volatile. Use the pullbacks as an opportunity to get longer. And I think by the end of the year, it's a whole different ballgame.
Well, Andy, thanks for joining us as always for this weekly market update. Our viewers really appreciate it, as do I on their behalf and for my own learning. So just thank you for joining us again on Liberty and Finance.
It's my pleasure. Enjoy your time with your family. Look forward to catching up with you again next week, Dunnigan.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. Call me directly at 419-819-9209 or my sons and fellow brokers at 310-562-6400 or 419-490-5295 or email us, kaiser@milesfranklin.com.